Okay. Wow. You see, guys, time is starting to run. Okay, we have about 45 minutes for this panel, so we're going to try and to do it as efficient and as down to earth as possible. A few words before we start with the panel members. About 15 years ago, I was invited by the Ministry of Trade and Industry at the time to give a speech about future Chinese investment in Israel. Okay, remind you, it was 2002, 2003. And I made a presentation saying that I think Chinese are going to invest in Israel in big scale. And it made probably everybody in the room laughing, other than Yoram Moron, the head of Vertex, and Amir, who was then the CEO of the managing director of the Ministry of Trade and Industry. 15 years later, we're sitting here, and I think that there is no question mark anymore about Chinese investment in Israel. Chinese investment abroad are becoming a phenomena, and you've heard from Tehila about it. There are changes, and we're going to try and touch them today. And what we're going to try to do here in the next 45 minutes is to share the experience of the people sitting here who are on the daily life, dealing with making investment happen. And that's quite a challenge between Israel and China. And we've heard a lot about the Chinese challenge, but I think everybody around this panel will agree that the challenge is not easy on the Israeli side as well. It's not only how difficult it is to do investment from China, but it's also how difficult it is to work with us as Israelis and find a solution between the two. Let me start with Danny. Danny Shacham is the founder and president of Nextec Technologies, a high-tech company, and he did something very unusual on the Israeli investment map, and he took the initiative and 4 years ago brought into the company a major investment of 80% of the company by a company named Hans Laser. Now, it's very rare to have a company of that scale in China invest in a little bit smaller Israeli company, a not very big one. And not only that, the initiative didn't come from Hans Laser who said, okay, we're going to go to Israel and look for investment, but it came from you. So the first thing you would love to hear is, how did it happen? What was the process? And let's start with this.
Okay, thank you. Basically, Nextec was founded 17 years ago, and we realized along the time that since our business is in the inspection and the production floor, and we're doing laser inspection, we need to develop our business and find partners, really strategic partners, where the industry is and where the production is. So it was very easy to decide that an ideal partner will be in China, because most of the production was in China. We started to sell inspection systems in China, and we understood that the business is such that you need a local partner. You need a local partner because he knows the culture, he knows the companies, he have his reference customers, and definitely it can be an added value other than we as a small company will start on our own. And I was asking Cukierman at that time to try and look for these kind of partners, and very quickly when we looked at the list, we thought that Hans Laser has a good capability to fulfill it, because they were in laser and they were in inspection and they're doing a lot of other things in laser, but it was kind of a match. And I was in China for another project, so I proposed that I will go down to Shenzhen and give them a presentation and see if there is an interest. And that's what happened. I came down there, it was organized as a meeting with the head of the inspection department, and he was very interested about what we are doing. We had a big contract then with FAW, and it was very impressive, and I arranged a visit for him to FAW, so he felt that there is a technology, there is a synergy, we have products that can fulfill what they are missing. And it took a few months, and then they came to Israel, we were there again, and we signed the contract for the investment. Basically, they bought 80% of our shares, And the idea together was to found the daughter company in China. We call it Nextec Shenzhen, Nextec Technology Shenzhen, which will do all the marketing and the sales and the local support and the exhibitions, and this will happen.
Okay. That is still quite a rare case. We don't have many such cases in Israel, China. You know Hans Laser pretty well by now. Is this something they will do again? Meaning, is this an experience that you see them as, Hans Laser is a billion-dollar company, active all over the world. Is this something they will do again, or is this an exception of an Israeli entrepreneur who took the initiative, came in the right time to the right place?
I don't think it's an exception. I think that basically they are a very high-tech and industrial-oriented company, and I assume that they will look for investment which are complying to their line of business or expanding their line of business. So I know they are looking for some more businesses. At the time we did it, they didn't have much experience with international mergers and acquisition or buying shares, but they learned since, and I think that they still continue to invest, and I'm sure they will do it again if they feel that it will meet their business. They will not just be a financial investor. They will be a strategic partner if it means that they can expand the business, and that's how they look at it.
Okay. Benjamin, let's go to you. You know, you're the only Chinese here, so we have to give you some precedence here. Benjamin is the managing partner and one of the founders of Yafo-Capital. He's been working and focusing on Israel, China business and M&A for quite a while, and we actually spent quite a few days, a few months ago, working together on the due diligence on a deal between Israel and China on both sides, different sides of the deal. And Yafo-Capital is an investment banking company mainly dealing with cross-border and technology-oriented M&A. What I would love to hear from you is to tell the audience here a little bit about how does it look from a Chinese eyes. The Israeli companies, when they come to the M&A, when they come looking for investment, what are we doing wrong? What are we doing right? And if to refer also to what Danny said, from the business you're involved in, how many of them are dealing with small-scale startup companies? How much openness do you see towards such small-scale deals? Please.
Can you repeat your last question?
The last question I was referring to what happened with Danny. You know, Nextec, when started, was a small company. Most of the deal we see are, you know, Alma Laser, Ava, and so on. How much openness do you see these days to more and more for small and medium companies as an openness on the Chinese side?
Shalom Likulan. It's great honor to be here to speak with you guys and to share with you guys a little bit my experience. Yafo-Capital is a boutique investment bank based in Shanghai. We are helping Chinese investors to do overseas investments, especially in Israel and also Europe. We are more focused on the later stage companies and the M&A deals. We are mainly working with the big companies in China and public companies. Regarding the experience dealing with Chinese investors, actually each year we execute tens of deals, but I think, but you know, most of them failed because of many reasons. I will share with you guys several reasons behind. I think the first reason is the first thing is important that you need to have a very good communication and follow up with the investors. I want to know on site how many of you are active WeChat users. Please show me your hands. I think at least 60% or 70%. So I see more and more Israelis, including Americans, are using WeChat, dealing with Chinese people. WeChat is a very powerful tool for foreigners to get into Chinese market because as you know, especially when you deal with the strategic investors from China, most of the decision makers are not using email. They just use WeChat every day. So it's very important to build the WeChat connections with these companies, and you must use it very well. And this is crucial to deal with Chinese market. And also, I think it's very important to follow up with the investors you meet, because sometimes maybe the Chinese side will not talk with you, and you will stop, and the communication got stuck. But it doesn't mean that there is no chance to go forward. Let me tell you a story. Recently, actually, earlier this month, we have to achieve acquisition agreement between a Chinese public company and the Israeli medical device company. It took us at least almost 1 year to reach to this point, and it will take another few months, 3 months, to get approval from the Chinese government. But during this course, we never gave up, we never stopped. We always communicate with the investors, and also to address all the concerns, all the disagreements between the two sides. So this is crucial for the whole process. And even the minor issue can create tensions and distrust between two sides. For example, when you show your intention to get into the Chinese market, sometimes the Chinese investors may see your real presence in China in the specific stage, but they may get misunderstood your purpose. It can create some distrust. And also, I would like to recommend that don't push too much. Don't push too much the Chinese investors. Otherwise, they will think you are desperately need them, and then they will feel scared, and they will run away. The last but not least, you never give up unless your company or their company die. Of course, it's based on the fact that both of you match each other. And I would like to also say the understanding of Chinese investors' expectation and concerns are very, very important. Sometimes the Chinese investors' demands or the concerns are really, beyond your expectation. But you still try to learn to understand their concerns based on the Chinese situation, not on Israel or global situation, because China is a little bit different world sometimes. Actually, the deal can take as long as 2 or 3 years. Also, it can be very, very short. 2 years ago, we did a deal. It's also a medical device company. It took us only 1.5 months because that was a pre-IPO project. So the investor was cornerstone investor. So they already got lots of approved documents, like the existing shareholders backup, so they can make a decision faster. When it comes to, I want to mention another, just one more point.
Okay.
It's very important to make sure your existing shareholders will get along well with your potential investors. Because if the existing shareholder against the potential investor, it may rule the deal, the opportunity with the new investor. Actually, 2 years ago, I personally got a Chinese investor ready to invest in Israeli technology company, and they are going to sign agreement next month. But unfortunately, the existing shareholder is also a Chinese investor, who is the major shareholder. They reject it because this guy is really a wild tycoon. He's worried that the new investor will take over the rights. So eventually, the deal didn't go through because of the existing shareholders' concerns. But actually, there was a mistake because the new investor was very cooperative. So you also need to think about this. It's also a crucial thing. Thank you.
Thank you, Benjamin. To summarize into a very short sentence, is a lot of follow-up, keeping the momentum, and understanding each other, which is probably right in other places, but in China, Israel, or China in the West is more crucial. Let's go to you, one of the most experienced people we have around this group, with experience in making investment for many years, the chairman of Cukierman, and also the chairman of Israeli-Chinese fund. I think this is the only one that we have currently. And you've been working with Everbright for quite a few years, managing a joint GP, which is quite rare. Would love to hear from you. First of all, how does it work to manage in a GP two funds, an very Israeli fund and a very Chinese fund, and Everbright is one of the leading Chinese investment entities and groups in China. And second is a few words about when you look at it from the view, not of you, but the view of Everbright, your partners, what do they want? When they look at the Israeli group of companies, says, what kind of companies do we want? It's, of course, everyone has specific, but in general, please.
Thank you. So I feel like home here. I have a client, I have a close friend and a partner. So thank you for welcoming me here. Actually, you're correct. We have been building a partnership with China Everbright, which enabled us to create a fund, which is an Israeli fund investing in mature Israeli technology companies. The experience of the first time we have established a partnership at the GP level with a group. We have been investing in technology companies since 1993. And this is very particular because most of the LPs of the fund are from China. We have, as you mentioned, China Everbright that committed $74 million in the fund, but also China Post, a lot of industrial groups and high net worth. It's very important to well define the role of each party. And I think that is, the strength of the relationship we have with China Everbright is related to the fact that the team that we are working with is headquartered in Hong Kong. Most of the people that are dedicated to the fund have a Western culture. They worked in the US and they work in investment banking and private equity internationally. They also understand that we need complementary roles. For example, our assignment is to identify Israeli company, to lead the negotiation, the due diligence. And their role is to assess whether or not these Israeli companies have a potential of growth in the China market. And once we have invested, their role is to support the development of the Israeli companies in China. So I think the fact that you clearly define complementary roles is very important in order to build long-term relationship with a Chinese partner. I think another benefit of China Everbright is that it's a strong bank, very present in the corporate world in China and the private equity world. So it's easy for them when we look for a strategic partner to approach the key leaders of the strategic group that are relevant for the Israeli companies. Now, what we are looking for, it is disruptive companies with disruptive technologies, but with a proven track record. We have been investing in mature companies since 2000. We were, I believe, the only venture fund that invested in Mobileye in the previous fund, but also we are looking for companies that come with disruptive technologies. If you look at the recent portfolio, we have companies in the 3D printing, in ad tech, we have a biotech company and a cutting tool company, but all of them come with a proven track record and disruptive technologies. And we think that the China market is a huge opportunity for many of the Israeli companies, obviously in certain sectors. And the fact that we are able to, with our partners, open doors to this huge market represents a fantastic opportunity for many of the Israeli companies. And we are continuing to promote the relationship between Israel and China. We have now an office in Hong Kong and in Shanghai. We have this partnership with Yafo at the investment banking level. And we are happy to see that if for 20 years our activity was between Israel and Europe, in the last 5 years, our investment banking and private equity activity has been shifting towards Israel and China.
And I say that one thing that goes as a line of guidance is that every company you would look at has to have a Chinese angle.
Not necessarily. If you look at our portfolio, it's not a prerequisite. Obviously, it's easier for our partner to help them in the China market. But if you look at, for example, we invested in Tabula, which up to now has no sales in China, or we have invested in a company called Lamina, a cutting tool company. When we invested, they had no sales in China, and today, 3 years after we invested in the company, the largest market for them is China. So they may not have sales in China, but we think that we can create a lot of value if we see that there is a growth opportunity in the China market.
Okay. Oded, we actually met, almost 15 years ago, 14 years ago. And you were already looking into China at the time, and Oded is leading the activity of ZAG. You've heard Ilan earlier in the US, working mainly on US companies looking at Israeli companies looking at US, but also looking at China from the American perspective. And the legal issue is becoming a major issue when we are talking about investment, about M&A. And it's not only looking at the documents, but it starts way beyond that. And this is something that we've seen, and I think also when we talked last time, we see issues that companies are not very well prepared for. So looking at an Israeli young company, small, medium company, what do they have to look at when they go to do such programs in China?
Right, thank you. So we met actually, it was October 2002. You were the Consul General in Shanghai. I was taking Chinese companies public on NASDAQ. And I came to China, and I brought one of my partners, and I said, let's set up a meeting, and we met you. And he was very impressed. He said, wow, the Israeli taxpayers should be happy. So I give you the credit. And back then, so we worked on that. Today, I work a lot about Chinese investments in Israeli companies that are already in NASDAQ or just pre-NASDAQ. But just going back to 2002, I was introduced to a very interesting real estate project in a town called Jimo, next to Qingdao in Shandong province. And I came to Israel and I spoke to people, and like you're saying, everyone laughed. China, everyone rides on bike and they eat rice and they cheat you and whatever. Okay, so one thing led to the other, and at the end of the day, one of those, the biggest Israeli companies, the real estate companies, they decided, wow, that's great, let's go to China. It took them a year, so they took a guy that was in charge of all the Eastern Europe. Remember that back in the late 90s, a lot of Israelis were making a lot of money in Eastern Europe, right? So they took the guy that was in charge of the big success in Eastern Europe because he knows how to deal with foreigners, right? With new markets. So, and then they came to China, and he said for him, that was the first time he ever came to China. He said, wow, that real estate project, great, we'll do it like this. So the first thing he did, he engaged a law firm, an American law firm, but that has a small rep office in Beijing for a real estate project in Qingdao, and they give him excellent advice. Of course, the deal never, came through. A lot of issues. That land, I'm talking about 2002, that was ahead before the Olympic Games, and Qingdao was one of the cities that hosted the Olympic Games at the city, along with Beijing. So that land was sold for, I think, 4 times the price that they were offered within like 2 years. It was a great deal. But they missed it. And they missed it not only because the agreement was like this or like that, but first of all, there's a cultural issue. By the way, I'll surprise everyone, even in the US, Israelis think they know what they're doing. There's a cultural issue over there. There's a different to the language. The words that you understand are different sometimes when American says them and when Israeli says them, okay? So people should understand that. Same goes to China. In Hebrew say, Ben bno shel kal vachomer, okay? It's not kal vachomer, it's ben bno shel kal vachomer when it goes to China. So that's the first thing people have to understand. They have to understand who to engage, who to work with, how to approach this. So that's number one. Back then, it was only investing into China. Today, also, Chinese investing into Israel. So today, in a way, Chinese investing into Israel, if you manage to secure the fact that you will receive United States dollars into your bank account in Israel, you're fine. That's a big hurdle to overcome. There's a lot of issues, but if you manage to do it, you're home free. Because, okay, you got the money. As long as you control the IP, you control the product, you got the money, great. We did it with few Israeli companies on NASDAQ. Actually, Chinese money saved few of the IPOs. There was a company called Checkup, I think. They saved the IPO because they got some money. We did it with Oramed. There was another company, pre-IPO, Mappy, that got, there are a lot of companies that got it. Other companies, by the way, failed. They signed the agreement, and then the window closed. The bigger issue is when you want to operate in China. And a lot of people will come, and there are a lot of opportunities, funds. Every time I keep getting calls from China and friends I have over there. Come, bring us good technologies from Israel, medical devices, biotech, healthcare, whatever. And we'll give you the money. We'll have one of the development zones. We'll help you set up the operations. We'll have 50-50, or you can even get control. Everything will be fine. But you have to understand, before you get to the agreement, what are you getting? You're getting RMB, Chinese yuan, which is very difficult to take out of China. Back in 2002, people said, you'll see in a few years, every week there was a new reform in China. In a few years, RMB will be full, a currency you can basically take out of China. Unfortunately, that has not yet occurred. Okay, despite all the signals, not yet there. So as a result, you're opening a joint venture in China, great, but you'll have RMB. What can you do with RMB? If you have a lot of uses for the RMB, great. But if you don't, that's a big issue. Number one. Number two is the control. So you think you have a very nice agreement because in the US, right, you sign an agreement, you work a lot about the agreement, then you have the closing, and then everything should be fine. And if not, you go to the court, and then the court will decide. It will take time, you'll pay the lawyers, but at the end of the day, you'll have a judgment, you'll enforce it. Everything should, in theory at least, be fine. In China, that's not the case. You can go to the court, maybe you'll have a judgment, go and try to enforce it. Good luck. Good luck with that. So the issue is that you have to have control on what you have there. The IP, what Ilan, my colleague, mentioned earlier, 100% correct. So we just dealt like last week with a medical devices company from Israel, and they have their partner in China, and he says to them, listen, instead of you selling me the systems, come, we'll do a joint venture, we'll manufacture it here, it will be a made in China product, and you'll make tons of money. So yeah, but what kind of money? Again, it's RMB. And again, who's going to control? So you have to control not only the board, wow, like you do in Israel or the US. You have to control the bank accounts. You have to control the signatory rights. You have to have someone that you trust. Not someone that you met last week or 2 weeks ago or 6 months ago. Someone that you trust and you know that is loyal to you, that is going to be there and manage it and operate it and control it. And most important thing, with all the respect to IP, and again, I'm a lawyer, so I should be advocating for the law, right? Most important thing, if you have crucial items in your IP, in your product, keep it to yourself. Don't share it, okay? Sharing, in the US they say sharing is caring, they teach the kids. Here, sharing is negligence. Don't share it. Have some leverage, always. Keep the leverage, sell them what you can sell, then if you want, manufacture the rest of it there. So, like I said, it's not just the negotiation of the agreement. The real work starts afterwards. It's how you control it, how you manage it. So, that's basically the story.
So it's doing homework, it's structuring things the right way, taking into account everything.
First of all, structuring, then afterwards having the mechanism to enforce the agreement. Again, going to politics a little bit, just for 1 second, people said in the past, if you have an agreement, between countries, they'll enforce it, like you see North Korea and the US, you have the Oslo Accords, whatever. It's not just the agreement. It's also how you enforce it, how you manage to process it, and of course the partnership, the trust between the partners. That's crucial. And by the way, a lot of people say in China, oh, Chinese cheat. I completely disagree. If you have real partners over there, sometimes my experience was that irrespective of the agreement, the partners were real partners doing things that they're not supposed to do under the agreement. On the other side, if there was someone who was not really your partner, the agreement didn't really matter.
And I think in this regard, both Danny is smiling all the time when you're saying that. I think we all agree that at the end of the day, it's the agreement is the beginning, it's not the end. If you are working right with your partners, then the need to look at the papers and the different articles is reduced. Laly, kept you waiting for a while. Laly is leading the business development and investment relation in the OurCrowd, which is the largest global crowdfunding platform in the world. Now, you don't have activity as so in China, but you are all around. You are in Taiwan and Singapore and Australia and India, and you work with Shanghai Bank, and you work with companies looking at China, but you're still not there. You're waiting for something, how to go into China. And that goes for you and for the companies you work with. What are you waiting for?
So first of all, it's a good point. When we do business development at OurCrowd, we look at ourselves and we look at our portfolio companies. What interests us generally is three things. We're looking at deal flow, we're looking at investors, and we're looking at business development opportunities for our portfolio companies to grow. And obviously, in those three elements, there's much to do in China, both for us and for our portfolio companies. Just in terms of numbers, we have invested till now more than $400 million in 120 companies. I would say in Israel we have 85 companies that we invested in. So it's a large portfolio, it's across stages, across sectors, covers everything, medical devices, agriculture, cyber, enterprise software. The most interesting, I would say, from a Chinese-Israel perspective is medtech, agtech, hardware, IoT. But in all of these, we have different stages, and this is crucial. And I can refer to the point that Eddie mentioned before, focusing on later stage companies and the difficulties in negotiating and maintaining contractual relationships, that it's very risky for earlier stage startups to be directly involved in China. When I look at our portfolio companies, I can see that we have about 15 companies with some presence in China. Typically, it starts from manufacturing for the hardware-related companies. So some sort of testing, manufacturing, all the way to actually doing manufacturing in China. In terms of China as a market for our portfolio companies, this is even later stage. You get to the market later. First, you use the market as a manufacturing ground. And if I look at us, at OurCrowd, indeed we have a very strong partnership in Singapore with one of the leading Singaporean banks, UOB. And that is also a gateway for us to China and Hong Kong and the vicinity. We have a similar agreement with Shanghai Bank in Taiwan and the National Australian Bank in Australia. And we look at the bank as the proper gateway for us to enter the market, because the bank has corporate customers. The corporate customers can be customers of our portfolio companies. And this way we eliminate a lot of the noise in the middle. And this is also one of the conclusions of trying to establish presence in China, of hosting investors, delegations, universities, business parks, municipalities, hosting different players from the Chinese ecosystem, is that it's very difficult for us to properly eliminate and validate the different players. And this is where a financial institution becomes very natural collaborating partner for us.
So, like everybody else here, the bottom line is don't try to do everything by yourself in China. You work with Hans Laser, you work with Everbright. Chinese have a saying, correct me if I'm wrong, when you walk into the woods, hold the leg of the elephant. So find the right elephant to walk with when you go into China. Now, I promise that I'll have time for questions, and I'm almost managing that. So if you have any questions, we'll be happy to take questions from the people here. Not everybody at the same time. Now I feel like the China in the early days that you would ask anybody else question and the answer was never. So we have a couple of more minutes. Maybe Danny goes back to you. What would you advise a small company like Nextec, when you went to China, when they want to find a Chinese strategic investor, what should they be prepared for?
Okay. Basically, it would be a true story that it's not easy. Don't expect things to go very smooth. We are coming with a different culture. We are making, decision-making is different in China. You have to build up the trust and the guanxi. And, but basically, I think it's a great opportunity. It takes longer to build up the business than you expect. So if you ask about ourselves, it took us longer in terms of building up the daughter company and starting to do the sales and doing the training and doing all the support. And we had a lot of trips back and forth, also recruiting the right people and recruiting the general manager. But at the end of the day, if you look at the bottom line, it's a great opportunity. You have to be patient. You have to understand that you are not in the US or in Europe. And it's very fulfilling.
Please.
I failed to mention that we do have a lot of Chinese investors in our portfolio companies. I was speaking more about doing business for our portfolio companies in China, but in terms of receiving investments, we have major investments in OurCrowd and in our portfolio companies from significant Chinese investors, private and institutionals.
Mm-hmm. Good. So we are closing by a few words maybe to summarize. Chinese investors are here to stay. We will have more and more Chinese investors. I've talked with some guys here and somebody said there's going to be a wave of investment. There's not going to be a huge wave of investment, a tsunami of Chinese investments. There's going to be many small waves of investors. Each one of them will check very carefully what he's doing, how he's investing. He's going to do due diligence very well. The days of the beginning of multiples jumping when it's a Chinese investor, I've seen Israeli startup asking for a multiple of 10 from an investor, and then he sees a Chinese investor coming back and asking for 20. Those guys know what they're doing. If you want to bring them to invest, if you want to go for M&A, first of all, it's like everywhere else. You have to do everything. Like you're going to the US, you're going very well. Then add to what you had from Ben, from Danny, and from the others. Then you have to take an extra mile. Work harder, maintain relationship for a longer time, invest more effort, and find, if you can, a strategic investor that will give you more than just the investment, but will also take you into one of the most fascinating markets and challenging markets in the world, which is China. Thank you guys for joining. Thank you.
Thank you.